Hey guys, so what a day on Friday, and once again the bulls are kind of going, well, I think we're still in this thing. People are watching, basically portfolios still going red if you're heavy into tech, like you see rotation going on. But we'll go into all the data that came out in case you missed that. Also some charts you guys requested, as well as, where the indexes might be going. And there is definitely one chart that you'll find interesting because I've been talking about it for months now. We'll see where this goes, kind of like a year first. So you're getting to see another one happening right in front of our face. But if you didn't notice, the unemployment rate actually ticked down, shockingly. I can't believe it. Wink, wink. Even though the other jobs data was definitely mixed, showing still soft jobs data. We went down from 4.3 to 4.2. Woohoo, right? But then you got, where's the jobs going? So you got full-time unemployment down at the bottom, minus 438,000 jobs. Part-time jobs actually went up. And of course, part-timers go up in a time like this because, most companies don't have to pay benefits. So they save a boatload of money. This goes back into the comments. If you read the comments in these videos where people are saying, they're working 2 or 3 jobs. And I'm like, yeah, but there's still 2 or 3 jobs to be had, right? And when those part-time jobs start to dry up, then, we're going to see something a lot different out there. But this is something, we hadn't seen in like 25 years what we're seeing when it comes to job openings shrinking and the S&P 500, sky high. Okay, you can see this right here. This kind of goes back to if you pull up the economic cycle versus the unemployment rate. It's just very strange to see the market continue to go higher and higher as unemployment rate's going up pretty rapidly, and we're obviously in late stage economic cycle. Some people would say, and I know I would definitely say that. But again, when you pump, whatever it is, $8–10 trillion in the system, still out there, and people still have a lot of equity in their homes to fall back on, which is kind of holding things up right now. But when you look at the indexes, you can see a couple things going on. One, you can see we've fallen out of this rising wedge once again, coming down in here. Obviously, starting to fill gaps. That's kind of like the thing of the week was just filling gaps on the S&P, Qs, and the IWM, which we'll get into all of those. We're in a weekly fair value gap. That's where we started to bounce from and kind of hold us up, even though we were dropping on Friday. But again, the S&P 500 is much better shape than the Qs, right? The other thing still in play is that double top we talked about probably at least a week ago. And so do I think it's going to play out down there right now? Who knows? I mean, we're in this seasonality of, September, October with a rate cut coming. So, we'll see if it plays out or not. But when we look at things, I always say just look at the 200 moving average. We'll look at that on a few stocks for sure. But when you look on this one, what's funny about this, look at all the confluence down here. I love confluence, right? What is down here in the S&P? Well, you got the 200 moving average, the yearly POC, which is basically the largest volume node you have, where the most volume's been this year. And then on top of that, that's the neckline for the double top, right? So are we going to get down there, this month, next month? I'm not sure about that. We'll see. Again, you have to see how the market is going to react to this rate cut, whether they're doing 25, 50, all that good stuff. Or is the market going to say, hey, they're turning back on the printers. Wonderful, right? It's been a while since we've been through something like this. Now, you look at the Qs, again, this trend line is still intact. So this is a weekly chart we're looking at here on the S&P and the Qs. Again, what do you see them put in on the weekly? A lower high, no doubt about that. And so this is definitely starting to turn into a short-term downtrend or a downtrend. So this is definitely starting to turn into a downtrend if we can get turned back up here and put in some kind of higher and low. And again, we're only about 5% from that trend line right there. And so that's really nothing for the Qs. They can do that in a couple of days if it needs to. It was down almost 3% on Friday alone. And so again, this is another one's in a weekly fair value gap trying to bounce. You do have some gaps right down there below, also some areas of interest where you could definitely see a bounce. There's no doubt about that. But, bulls are happy, bears are happy because they saw this huge move up, V-shaped recovery, and now it's turning back over very quickly. And so I know people that do like the Elliott wave counts and stuff like that, they were kind of expecting this to start to happen. And so, but they still, it's funny, I follow people that do Elliott wave counts and they still expect one move up higher. It's just kind of going to be weird to see it happen in September, October if it does. If it does, it has to do with the rate cut. And the market goes, oh, great, we're turning back on, the faucets, and here comes liquidity and all this good stuff. But right now, this needs to turn up, bounce right here, turn up, and start putting in another higher high and obviously solidify that higher and low right there. That's what you're really looking to happen. And if you look at another way, you can kind of say, well, I mean, that's terrible. Hold on, let me put a line here. If you look at it this way, you can see, and another way to look at it is if you see, you can kind of say, well, maybe that's a broadening wedge or a megaphone pattern, whatever you want to call it right there. It's happening on the weekly. So if we come up and touch the top right there, are we going to come back all the way down? I mean, that's really the bigger question to look at when you look at higher time frames. Either way, it does not look super bullish looking at that. And then adding the RSI on this, you can see we're still not below 50, right? So believe it or not, bulls are still actually in charge, and we haven't been below 50 on the weekly RSI for a smidgen right there for 2 weeks back in October before we bounced on that huge rally. And so that's something bulls have to defend. You got to stay in charge, right? Really, the last time we saw it was back in the 2022 crash. And so it is a big deal in a higher time frame to see the RSI go below 50 and really start to push down. So just keep an eye on that and see what happens. Again, you got to get the bigger picture, not just trying to look at the hourly and daily all the time. It'll give you definitely a different perspective. And so, looking at the Qs too, you can say, well, another way to look at it is it's just in this triangle, right? It's just wedging, right? So yeah, it could come down to the bottom here, not hold this little shaded area, which has definitely been an area of interest where buyers have stepped in. Also been sellers there, so it's been support and resistance. And so do we see something like that? That's what we're gonna have to figure out over the next few weeks right here. Again, this is a daily chart. And one thing to definitely keep an eye on, which could cause this, is some major stocks like Microsoft. What's it doing? Rejecting that 200 again. So it is below its 200. You go over here and you look at Amazon. It's below the 200 now. Remember I talked about the false breakout right there? Fell below that trend line. It's below the 200 where it closed at. So that could continue to fall. Then you got Google, which there's two kind of Google shares, right? Class A, Class C. That is now below the 200 moving average and sitting on an area where it needs to bounce. If it loses this and it closed slightly below it the other day, then absolutely it can come down. It can finally fill this gap right here, which was around like 140, 144. And so keep an eye on that right there. And the reason why this is super important, especially for the Qs, if you look at the S&P and you look at the weights of just those three stocks, which technically is 4 because obviously you got two classes of alphabet, you're looking at 15%. That's a lot just for three stocks in the S&P. So it's even more in the Qs for sure. And so that's a problem. Plus you got Nvidia. Obviously that's been under major pressure. All the semiconductors under major pressure. That's why the Qs have lagged like crazy. And they continue to lag if these stocks do not get back above that 200 moving average. Now Tesla obviously does what Tesla always does. Craps the bed, right? We talked about it at 135 or 235, excuse me. We talked about it at 235 where all the the sellers are going to come in. They all came in at once, just flooded in. Then Friday was a disaster. Look at that candle. Whew, completely wiped out. 2 days of gains. Came back where though? It is in a rising wedge, okay? But until it breaks down, that doesn't mean it's going to play out at all, right? If this thing can bounce, because it's in the shaded area, it's on that trend line right there. So if it can start to move back up, if that's the case, then we can continue this thing to continue to rise up, right, and not fall yet. But that's just a nasty, nasty candle, okay? And so keep an eye on Tesla. Nvidia, I already talked about until I'm blue in the face. But again, where's the 200 at? Because they haven't touched it forever. Actually below the trend line, below that shaded area, which is where the golden pocket is at. So I'll be stunned if we don't come down here. They don't push this thing down to at least 96 to 98 bucks going over the next couple of weeks. But we'll have to see because, they're just getting crushed right now. I think a lot of people, put in the comments, would you buy at 96, 98, or would you wait for that 200 moving average to actually hit? And I don't know any really catalyst coming up because you'll see the economic data this week's pretty mild. There's no earnings. There's really no catalyst. And so it's really got to wait for the Fed to talk. And it's not this week. It's going to be next week, right? AMD is a mess, but it is in an area where it actually could bounce, right? It's below its 200. It's sitting there getting that death cross we talked about a few weeks ago. But it is an area where it has bounced multiple times. Also, that trend line coming in there, I guarantee if I pull up a fib, it's in a discount range also. So a lot of things are in these where they're close, so they're in these bouncy ranges. And so don't be surprised in that. Also, you look at Palantir here. It got included in the S&P on Friday. I believe the news came out. Hopefully it doesn't get the S&P 500 inclusion curves because SMCI was included in the S&P 500 and it fell ever since. And there was another stock. Same thing happened to it. So we'll see if Palantir can avoid that. Again, there's some liquidity right there, right where that 50 moving average is. So that will be a good bounce spot if this continues to try to move down. But it's held up well. And that's the news is what held it up on Friday. But again, it's sitting at a decent support, nothing major support or anything. But so you could see a bounce. You could see some move up because to be included in the S&P 500, their stock has to be included in all the ETFs that obviously mimic the S&P 500 in some way, shape, or form. So, we'll see. Just keep an eye on this one, but it's not bad news to be included in the S&P 500 normally. Now, watch out for Roblox because this is one of those ones that's about to get crushed back down or it's just going to have an explosive move up. You know, we've been talking about this when it just keeps sitting there. This is a weekly, right up against that year-to-date anchor VWAP, or all-time high anchor VWAP, excuse me. And it's just been rejected so many times, right? You see the daily's just sitting right there, like it wants to, keeps pushing up and pushing up. And it's not like trying to kick in a door, right? You don't get on the first, second, and third time, then finally you're weakening the thing up, right? And you're just waiting for this push. And not only that, you have the weekly, monthly, and yearly opening price right there. So these are important levels. So if it breaks through that, which is why it's having such a hard time getting through, because you got so much stuff right in that area. And if it breaks through that, then absolutely, immediately, anybody shorting this thing will probably start to cover, and it can push up. And the other reason you got to look at this, when you pull up the volume profile in this thing, you can see clearly, I mean, once it gets above that, where's the resistance? You know what I'm saying? It's really nothing there, because it's been sitting in stage 1 for, what, 2 years? I mean, it's amazing it's still sitting down there. It's not because their revenue increase or anything great about it. It's just all technical. So if it happens, it happens. If not, just expect another push back down. That's the way it is with this one. Now, some of you guys asked about SMH and SOX. And so, again, this is another one below the 200 moving average, but it's in this shaded area, which you can see buyers have stepped in right here. And so let's see if they're going to end up stepping in now or waiting a little bit. Again, this one has Nvidia as its #1 holding. So until Nvidia bounces, this will not bounce. Okay, just keep that in mind. Again, it's in a discount range. You come over here, you can see it playing. As I zoom in here for you, you can see a little better right there. But again, it's trying. Losing the 200 is not good for any stock or ETF. Okay, SOX, it's almost identical. It actually got rejected off of 200. It retested and rejected, which is not a good thing. Okay, and again, this one, it hadn't set a lower low yet, but obviously it falls below that white line at 195. Then we got another lower low, which is extremely bad. Okay, but again, until Nvidia starts to recover, I don't really see anything happening with these two. Now you look at IWM. We talked about it. What can you not do? You cannot drop below the 2024 high. Once again, boom, terrible Friday for it, as in every index. Pushed down, did fill another gap, bounced off the 100. 200 is right down there below, as you can see, sitting around like 201, I believe it is. And so looking at this one, this is just another one, right? It needs to hold where it's at now and set a higher low. Okay, even though it looks ugly, set a higher low and then try to start moving up. And we'll draw a trend line here. And as long as it doesn't fall below like 196.50, you know, not bad. But this is another one. What's it doing? It's just kind of wedging. It's in this triangle. And so it's setting lower highs, but it's not setting lower lows, right? And so it's higher lows right now until proven guilty on this thing. And these can break either way. So we'll see which way this was going to go. Now, earnings, we're getting to that time period. We're not going to see any kind of real major earnings. You'll have Oracle on Monday. You will have more retailers coming out. It's such a mixed bag. It's insane. GameStop actually reports, and then there was somebody bought a boatload of calls. It was either Thursday or Friday on this one. I'm not sure if they're playing earnings or not. You got Dave & Buster's, Petco. Nothing going on Wednesday. Big Lots, I thought was supposed to report Friday, and they must have pushed back then. So now we have them on Thursday. I guess another one, I think it's down like 90-some%. And then you have Kroger, and then Adobe and RH right there. And then as far as the economic data, it's nothing super major, honestly, when you look at it. You know, Monday, nothing to speak home about. Tuesday, nothing to write home about. Wednesday, you will have core CPI month over month, core month over month, and then regular CPI year over year, crude oil inventories. Let's see how the 10-year bond auction is going. It's kind of been iffy, definitely causing volatility in the market. Then on Thursday, you have core PPI and then PPI month over month. And then unemployment claims, which have been coming under what people expected. We hadn't had any issues with a 30-year bond auction, so I wouldn't even bother even watching that one. And then the prelim, University of Michigan consumer sentiment and inflation expectations. And so let me know what you think is going to happen this week. Right now, the futures are selling off as I'm recording this. So we'll see how this week's going to set up or not. So anyway, hope you guys got something out of it. Please hit that like and subscribe button on your way out. If you want to sign up for the membership, feel free to do that as well. Less than McDonald's combo, and you see what all you get in that as well. And that's what the morning news brief looks like if you wanted to do that. And so anyway, I'll end up seeing you guys either in the morning if you're a member or late in the evening if you're not. So have a good rest of your Sunday, guys.